Good morning and welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Thursday, February 20th, 2022, 202020. How's that? Looking at the market so far, looks like it could be a little bit of a weak open this morning. So we'll have to kind of play that by ear, but the market overall has been extremely strong. Currently, anyway, we have the Dow Jones futures this morning down 83 points, S&P down 9.25, NASDAQ down 32.50. Yesterday was kind of a, well, not a bad day. We saw the 10-year Treasury yield move up a little bit. As a result, we did see the market react to the upside. I talked about that earlier in the month. It's kind of interesting when that 10-year Treasury yield rises, money's rotating out of Treasuries, and it almost always seems to be flowing into equities. So that's just one relationship that's worth noting. But before we get into all that, let's go through our agenda for today. I'll go through the daily market recap from yesterday. In talking technically, I'm going to talk a little bit about the U.S. dollar, which just seems to be powering forward. I really believe that we were going to see a weakening dollar, and we are not. And that, I think, puts the Fed in kind of a rough spot. We'll talk about that. Earnings spotlight. Several companies coming out with better than expected earnings, and we're seeing some pretty big pops this morning in some stocks that you might not be aware of. So you may want to stick around for that. Upgrades and downgrades, and then we'll get into Turning Point. Turning Point is really all about my trading strategy. I mean, Turning Point, that's what I look for. I look for stocks that make breakouts, pull back, and hit an area which I would refer to as a turning point, a key support level. And so I'll point out some of those charts and some of the things that you can look for in in your trading. And then we'll wrap up the show as we always do with 3 you must see. Those are 3 charts that I think are worth taking a look at before the market opens. And so let's go ahead and get started. I'm going to jump right into the daily market recap. And let's take a look at what happened yesterday. So we got the Dow Jones Industrial Average yesterday up 116 points. The S&P 500 was up 16. The NASDAQ up 84, now above 9,800. For a while, we were wondering how long it would take us to get through 97. Well, that's gone now, 98. And who knows, maybe 10,000 right around the corner. Doesn't look like it at the open today, but we'll see what happens after the open. The mid-cap, S&P 400 mid-cap, rose, got close to that January high, not quite there yet. And when you look at the mid-caps relative to the other indices have broken out in February. The S&P and the NASDAQ seem to be breaking out every day. And the mid-cap still trying to get past that mid-January high. Small caps even worse. You can see not even close to that mid-January high. So definitely these are the 2 indices that continue to lag, and they did so again yesterday. Small caps only up a little bit more than 1/3 of 1%. And when you're looking at the NASDAQ, which is gaining almost 1% on the day, it's just falling further and further and further behind. Energy stocks leading yesterday, up 1 1/3%. I talked about energy bottoming a couple weeks ago, and I think that's what we've seen. I think that the XLE, I know crude oil is up again today. I expect we're going to see that XLE move back through the 20, perhaps get up to that 50. But I really think we're in more of sideways consolidation. I wouldn't be surprised to see a little bit more of a run here on energy as it was really beaten down back in January. Technology, nothing beaten down about this chart. Technology just continues to power forward. It's been the best sector in the stock market for quite a while. It continues to be just that, up over 1% yesterday. Financials did break out again earlier in February. We're sideways consolidating, just a couple days removed from a 50-day test, but we did move up yesterday about 3/4 of 1%. Nice rally there. Looking to break out. Could use some help from the 10-year Treasury yield moving higher, though, and that doesn't look like that's going to be the case today. Real estate, getting a little bit of profit taking. Group had broken out. Market was moving higher a little bit yesterday. I think we saw some money rotating a bit away from defensive groups, as you can see here with real estate pulling back and with utilities pulling back. Utilities in particular, higher price, lower PPO. So you've got a little bit of a negative divergence there. So we might get a little bit more selling in the utilities. Moving on to the 10-year Treasury yield. Let's get an update, make sure we got the latest here. It's at 1.54%, which is down almost 3 basis points this morning. That normally accompanies a move lower in the S&P 500, or at least consolidation, and we're seeing red futures. So it all kind of fitting like a glove at this point. One of the problems, though, and I'm going to get into it in just a second, is what is the Fed going to do about the dollar moving higher. Well, let's save that for a minute. 10-year Treasury yield, you can see, has been drifting down. It's staying below that 20-day moving average. We haven't seen a move above that 20-day moving average since the beginning of January. So as long as we've got price action below the 20 and the 20 below the 50, we've got a downtrend in play. The question is going to be, can we hold on to those September lows down around 142, 145, in that range, mid 140s? I would have thought before, I would have said, absolutely, we're not going back down below there. But seeing what the dollar is doing right now and looking at what the bond market is saying, I think the bond market's telling the Fed to cut. So let's move on. Let's go into talking technically here. And let's talk a little bit about the dollar. The dollar has broken out above 99, well, it's now up to 99.60. You can see going back over the course of the last year, we tended to struggle in the 98 to 99 range. We saw 98 hit back in April, in May, July, early August. Actually tried to get a little bit above 99 in September, October. And then again, 98 to 98.5 in the month of November. The overall uptrend, when you look at this chart, I still see, for the most part, higher lows. And now with the breakout, higher highs. So looking out over the last 3 years here, it looks to me like the dollar, since bottoming at the beginning of 2018, the dollar continues to strengthen. Now, here's what's baffling. Normally, the dollar strengthening would indicate that the economy in the U.S. is strong, which it is. But what I like to do is follow the yield here in the U.S. versus the yield in Germany. And if our economy is stronger than Germany's, or Europe, I use Germany as a proxy for Europe, but if our economy is stronger than Europe, I would expect that our yields would be going higher than what we're seeing over in Germany. And that was the case when the dollar was rising from 2011 all the way through the latter part of 2018. These red shaded areas show a divergence where you've got the yield going in one direction and the dollar going in the other, and that's resulted in these periods of inverse correlation. Normally, we have positive correlation. Again, as this yield in the US moves up faster than Germany, or if it moves down slower than Germany, the net of the two continues to rise, and that generally coincides with the dollar moving higher. The red shaded areas show when we see negative correlation, where they actually start to diverge and move opposite one another. Doesn't tend to last long, and when that inverse correlation gets to about minus 0.5, that's where we've seen a reversal. And typically, it's been with the yield, the net yield rising while the dollar goes down, and we've seen a quick move back up in the dollar to correct things. Now we've got the opposite. We've got the net yield moving down while the dollar moves higher. And so if it's the dollar that's going to correct, we would expect to see the dollar drop. And instead, we're seeing the dollar break out. So again, when I go back to this chart, I was looking for the dollar to drop. That was my reasoning, and it looked like it was trying to do that. And then all of a sudden here, the last 3 or 4 weeks, we have been on a tear back to the upside. Now, what that means for the market, when you're looking at different sectors, you have to understand that when the dollar is moving higher, as it's been really, I would say since that bottom in 2011, this move to the upside in the US dollar generally coincides. Oh, I've got these numbers. Let me change this here. When you look at relative strength on the energy group and materials relative to the S&P 500, when the dollar is rising, it puts downward pressure on energy and materials. And you can see that's when these two groups underperform. And they've been underperforming for quite some time. The prior period, you can see from 2001 to 2008, the dollar was under a lot of pressure. And energy outperformed, materials outperformed. So one of the problems with the dollar breaking out here is that it's putting even more downward pressure on a relative basis on energy and materials. So when I say energy looks like it's going to rebound a little bit, I'm not talking long term, and I'm also not talking about major outperformance. I'm just talking about on an absolute basis, it looks like energy might bounce for a period of time. I also expected the dollar to roll over, which I thought would give energy and materials a boost. So far, we haven't seen that. So I just wanted to point out the ramifications of this dollar moving higher. Now, one of the things the Fed has talked about is that in order to get, well, let me back up. It's not what the Fed has said, but in order to get the economy inflated, in order to inflate everything, you need to see the dollar fall, because when the dollar falls, that's when you see energy and materials move up. So you want a weaker dollar in order to inflate the economy. And right now we've got the dollar showing strength. Now, one way to weaken the dollar is to cut rates. And the bond market, when you look at the 10-year Treasury yield, this is what this is telling me. It's not telling me that the economy is weak. It's telling me that the dollar is too strong, that we don't have inflation, and the way to inflate is to cut interest rates. And I think that's why a lot of folks are going into treasuries, because they believe that the Fed is going to cut rates. Now, the Fed keeps adamantly coming out and saying, nope, we think everything looks good right where it is. I don't want to keep rehashing it, but they were completely balled up and wrong back at the end of 2018. They had it wrong throughout most of 2019. They kept talking about raising rates. They said the lower inflation numbers were transitory, if you remember that, back at the end of April. They talked in July, I think, June, July meeting, that they weren't going to need any future cuts. I think they had cut, I think that cut was in June, July. It's getting so far away now, I can't remember. But they said no more rate cuts. That's going to be it. You know, remember they said they're going to stand pat for the foreseeable future or whatever. I can't remember their exact wording. I made fun of it for a while. But the very next meeting, they cut rates again after they had said that's, you know, we're one and done. Very next meeting, they did it again. So I don't trust this Fed, to be honest. I think the Fed's been behind the curveball or behind the 8-ball for a long time. And I think that they've, as far as curveballs go, I think they've been throwing curveballs at the market. So I believe that the Fed is going to cut rates again. I don't care what they say about standing pat. I think they're going to cut again. I think it's going to happen probably mid-year, possibly sooner. We did get a pretty good PPI report in terms of inflation picking up. So if that continues, then maybe that, you know, could change. We'll see. But that was one report. There have been a number of reports showing that inflation is well below the Fed's target levels. The way you prop that up is to cut interest rates, weaken the dollar, and then strengthen commodity prices. So we'll see what happens, but I think eventually that's what the Fed's going to end up doing. We shall see. All right, let's move on to, let's see here. What are we going to do next? Let's do the earnings spotlight. So let's move on to earnings. One big report that came out was Zillow, ZG, and I'm actually going to go over here. I want to show you this new feature here at StockCharts. If you go in and change the sharp chart symbol summary, and we put in ZG, check this out. So I know Grayson Rose has been writing about it in Chart Watchers. I don't know if everyone has seen this, but under symbol summary, you get a lot more fundamental data now. So I'm a bit of a fundamentalist. I'm a CPA. I mean, I was in public accounting for many years. So I like to have this information. And so I think it's really important to take a look to see what's going on the fundamental side as well as the technical side. But one key thing here is it also is giving us after hours action. So at 9:13 this morning, you can see Zillow Group trading at 61.93 from yesterday's close at 54.84. That's up 12.9% this morning after earnings. Zillow came out, their bottom line, the market was expecting a loss of 36 cents. The loss was only 26 cents. So pretty good beat there in terms of the bottom line, and Zillow reacting very favorably in pre-market action today. Now, if we take a look at the chart on Zillow, you can see that we just broke out above the highs that we had established back in July of last year. Volume picked up yesterday, so there was some anticipation going on here. And then if you look at a relative chart on Zillow versus the publishing group, and by the way, publishers have been doing well, Zillow has been rising versus the publishers for about 5 months now. So this is a stock that has been on the move higher. Wall Street seems to like it. And today we get the news why Wall Street likes it. So really important to follow that the relative strength. Let's see. Let's go with another big report here. How about This one, this company's up 30, well, it was up 39%. Let's see where it is now. This is stamps.com, 39% pre-market action. Closed yesterday at 95, today 133. And I have to say, this is one of those stocks that has some of the biggest moves up and down with earnings in the market. I don't know what's going on with the company, but let's go back and take a look at the last couple of years and just check out the multiple big gap ups and gap downs. Here was one in August. This one looks minor compared to some of the others, but here's your big gap down. We go back up, fill the gap, and then we roll over. Start to strengthen heading into the February report. This is we were near 200. The stock opened at 90. It lost more than 50% at the open. Here we're trading, I don't know, 83, 84. We opened at 41, another 50% haircut. Then the last 2 quarters, we've had moves higher, gap ups, but they haven't been quite as significant. This is a pretty big one, though, but a 40% move. So all of a sudden now, back up into the 130s on stamps.com. So it looks like maybe the worst is behind the company. It's turning back up. But when we talk about risk going into an earnings report, this is the poster child right here. All right, let's see. What else? Well, this morning, Domino's came out with earnings. And by the way, with Stamps, their earnings were $2.12. The market was expecting 93 cents. I don't know why they can't project earnings any better than that. That's kind of crazy, but that was a big beat on earnings. All right, let's move on to Domino's Pizza, DPZ. They beat. They came in $3.13 versus $2.93. Let's go ahead and show you this one. Okay, let's pull it up. DPZ. Up $61 from $297, up 20% this morning. Another huge move on DPZ. Let's take a look at the chart. And when you look at the chart, it was right up here to key resistance level. Couldn't get through. Well, it's through now. And on a relative basis, let's see what this was doing. Versus the restaurants, not bad. I mean, closer to the 52-week high than to the 52-week low. But the overall group had not been very good. But we did come in with a very strong report. And like I said, moving up $60 today on the open. That's going to be a pretty impressive breakout. Let's take a look at a longer term chart and see what the long, yeah, this is a lot of sideways consolidation for quite a while. This is a big breakout for Domino's. I'm not saying I'd be rushing in at $360, but if it does print a reversing candle, like a black candle today, or if it gaps up at 360, runs to 390 and comes back and closes at 360 with that long tail to the top, that would suggest maybe we're going to see a little bit more short-term weakness. If we could get this back anywhere near that 300 level, if this stock were to come back and fill this gap, then I think this is a stock you might want to consider. The flip side is if it opens at 360 and it just keeps going, keeps moving higher and finishes at 390 with that big hollow candle, then at that point, the top of gap support, 360, in my view, would become the more important support level. So we want to watch for that. Let's see. How about UCTT? This is another one that came out with strong numbers. They had a great report last quarter. Let's pull up UCTT and see what's going on here. They beat 33 cents versus 25 cents on their bottom line. And you can see the stock up 8.6%. Almost 8.7%, 28.50. So it's been trending higher. It's been in that very strong semiconductor group. You can see semis have been rolling to the upside, breaking out to new highs. UCTT on a relative basis has been very strong versus the group. It's going to be even stronger today with this huge breakout on its earnings. And you can see semiconductors relative to the S&P breaking out. I just selected stocks, 10 stocks for 4 different portfolios yesterday at earningsbeats.com. And this is one of the things that I focus on. I like to find companies that do this. The industry group that it's in is breaking out relative to the S&P, and the stock is breaking out relative to its peer groups, its industry peers, and the S&P 500. So when you've got all of these lines going higher from left to right, that tells you you're in a really good spot in the market. And UCTT coming through with another big earnings report up close to 9% this morning. All right, as far as to the downside, I didn't see any huge downside moves, but I can pull up CPRT, which is Copart. They only matched expectations. And in this market, matching expectations a lot of times not good enough. They came in at 65 cents. The market was expecting 65 cents. And you can see the stock down 5.8% in pre-market trade, down $6 to 98 bucks. Looking at the chart here, this is a stock that had been rising for quite a while. This is a kind of a big disappointment in my view for a stock that's been trading this strongly. If we pull up the relative strength chart, this stock is at a 52-week high. Now, granted, it's in a weak group. Transportation services has really been weak the last 30 days and trading near about a 4-month relative low. So it's not the best group out there, but this has been a pretty strong stock, and even versus the S&P 500, setting a new 52-week high at the end of January. So I don't think Wall Street was expecting just matching estimates. I think they were looking for a beat. It's going to be interesting, not that the fact that we're opening down, but what happens after the open. If we get a big red candle through that 50-day moving average, I'd be heading for the exits. All right, let's move on to upgrades and downgrades. Just a couple here. First one I wanted to point out is analog devices being upgraded today. Stock's up about 1% pre-market. It did open above that prior high that I talked about. I think I mentioned this one on my show yesterday at earnings beats. I wanted to get that breakout. I think it was 123.49 or let's see, 123.43. It opened at 125.06. That's generally a good sign. It went back down below the breakout level, comes back up, and yesterday closed above that 123.43 level, closing at 123.89. I think after the sideways consolidation, I believe the stock goes higher. They did beat yesterday, and they're getting an upgrade this morning. I agree with the upgrade. CYH, this is another big mover this morning after earnings last night. This is another one up 15%, breaking out of the sideways consolidation, getting upgraded today. I would say based on this breakout, I want to look at a 5-week chart or a 5-year chart weekly. You can see $5 has been a really tough level for the stock for 2 years now. We're going above that at the open today in a pretty big way. So any kind of a pullback down near 5 would be interesting to me. And again, let's watch to see what happens after it makes that push to the upside. Downgrade I wanted to mention. One is AMD, Advanced Micro Devices. I love the stock. A lot of times you get these valuation downgrades. Usually there are opportunities to get into the stock. It is trading down about 0.75% last time I looked this morning. And but technically it's broken out. And when you look on a relative basis, it doesn't get much better than AMD. Semiconductors moving up, AMD breaking out easily versus the group, which has been strong. This is a great looking chart. I don't agree with the downgrade. I think that we will see buyers coming in. Best case scenario would be a trip back down to the 20-day moving average. I'm not sure we get that, but we'll see. I think the market's been really strong and resilient, but a break wouldn't be a horrible thing. All right, let's move on. Let's go to Turning Point. Now on Turning Point, what I want to do is just kind of show you some key areas. When you get near resistance, I'm a short-term trader. So a lot of times if I buy a stock near support and it gets near resistance, that's when I want to think about moving back to the sidelines, taking my money and running. And if you take a look at this right here, you can see that the high that was established in January was right around 174. We pulled all the way back to 154, $20, and hit that, put in a doji right on the 50-day, close to the breakout level here. And then we returned back up to 174. To me, that's a potential turning point. Now, we're in an uptrend. I expect that we're going to break out rather than break down, but there's nothing guarantee we're going to break out now. So if you're a short-term trader, why not take that profit and then see what happens? So to me, COUP is at a potential turning point. Another stock, how about DLTH? This is a stock that's been downtrending. Duluth Holdings. But it's at support. It's down close to the support level. I'm not going to annotate, but you can see right here, probably at about the 770 area, we've got this prior low. We gapped up. We've worked our way all the way back down now to this level and tried to get a little bit of a reversal yesterday. But it's not a great stock. You can see relative strength. I'm talking about if I did anything, it would be a short-term trade. I don't really like to trade on the long side in a downtrending stock, not when I've got 1,000 or more stocks I can trade on that are trending higher. Something's wrong physically, fundamentally, mechanically, technically. As you look across this chart, something is wrong with Duluth Holdings. So getting in on the long side, you don't know if, when the next shoe is going to drop. You can see the big gap down here. You can see a big red candle here, a couple big ones here, big reversals. Is there going to be another report coming out? That's what you have to be careful of. Another one that I think you got to be watching closely here is Okta, kind of like COUP. They're both software stocks, both threatening breakouts. I think they're going to both break out, but are they going to do it now? OKTA had the breakout yesterday intraday, but closed back below the key breakout level. That is usually a warning sign for me. If I was in it, I would take the money and run. VRA, this is Vera Bradley. Look, after this huge move up off of the low, we had this huge move up. We pulled back. We never closed below 950. Multiple tests at 950. Came down here, 950. Right, would bounce back up to 9.25, right back down 950. Look at that long tail. It looked like we were breaking down finally below 950, and we come back up. Nice hammer going in. VRA, I think that's a turning point. CDMO, I passed this one along to Earnings Beats members back when we posted this reversal here at the gap support level. Look at what has happened since that stock hit that. So in the biotech space, when it moved up here to its high, it was at a 52-week relative high to the S&P and close to it versus biotechs. It pulled back, tested that gap support. Notice we didn't get all the way back down to the bottom of gap support. Again, when you get a gap up and a hollow candle, a lot of times top of gap support is what I watch for. There we go. It was a perfect turning point. All right, let's finish the show here with 3 you must see. First thing I want to do is show you Capital One Financial Corp. Now, when I look at this chart, and I want to just annotate this, a lot of folks may be looking at the glass as being half, hold on one second, looking at the glass as being half full, or excuse me, half empty, would look at this and say, wow, we've got a neckline right here. And it looks like a head and shoulder, right? Left shoulder. You come down the left side of the neckline, you go higher to a head. Right side of the neckline, you put in the right shoulder, almost perfect, symmetrical. Now all we need is a breakdown. This is bearish. I should be shorting this, right? I say wrong. I think that the topping patterns, when you see them in an uptrend, we're in a bull market. I would not be looking for topping patterns. I would have to see this execute before I'd have any interest. First of all, I wouldn't short in a bull market, so I don't short. But if I was thinking about shorting, I wouldn't do it just simply based on the fact that this looks like it could be a top. I would need to see that top. I need to see that breakdown of the neckline. I need to see the volume pick up. And if I did short, anything above that high on that head would take me out of a short position for sure. So that is one chart I wanted to point out. Another chart, and on my strong earnings chart list, which I keep, there are 320 stocks on it, 320 right now, that have beaten top and bottom line estimates, are liquid, and look relatively decent on the charts. Of those 320, 2 are energy stocks. Here's one of them, Halliburton. Now, Halliburton, I think this is one that could break out above its 20-day with energy bouncing. Look at it on a relative basis, breaking out versus its peers. That's the only reason it's on the list. It had a good report, and it's a relative leader. Finally, last stock, we're getting a breakout here on Stryker Corp. Look at all the tops up here around 220, 221, 222. Well, we finally got the breakout. Closed yesterday at 225. It is in medical equipment. Now, medical equipment overall it held on to this low. I really want to see this hold and see the group start to outperform. But you can see on a relative basis, Stryker is beginning to show some strength versus the medical equipment group, and it's just making this breakout. Definitely one to keep an eye on. All right, that is it for today. I want to thank everybody for stopping by. I hope everybody has a great day, great Friday, great weekend, and I will see you back here next week. Happy trading.